how people are now spending their money. We've been talking about petrol prices and how the high taxes on them are continuing to hurt average consumers. Petrol is retailing at close to 107 rupees in Mumbai, for example. But what is it actually doing to people's spending behavior? To speak on this, I'm joined now by Chief Economist at State Bank of India, Ghosh. Mr. Ghosh, thank you so much for speaking with us. Let me just begin with the report that you've put out today, which talks about the clear correlation between petrol price hikes and inflation numbers. How do you think these high petrol prices are impacting the way people are spending?
That's a very interesting point. What is happening is that if you actually look into the data, the consumption of the fuel, what it is doing is that given the significant increase in the fuel prices, the consumption in fuel is now crowding out the expenses on health and also on other items of grocery and utility in such a manner that their demand has actually significantly weakened. So in an ideal situation, an increased consumption of fuel could actually have had put up an upward pressure on the CPI numbers. But in this case, what is happening is that we are actually seeing some sort of a weakening in demand in some of the items, given the fact that a larger part of the expenses on fuel is cornering the household budget. So I think that's an interesting development which we need to watch out in the future.
You also put out some observations on the basis of how people are spending with SBI cards data. What are the consumption patterns emerging from this data?
See, I'll just explain you very briefly about these SBI the card data which we have used and also the NSO number. See, I think there are two observations over here. In the last couple of months, the data when we are collected from the SBI cards and was trying to divide in terms of the discretionary and non-discretionary items, we found out that the inflation as per the SBI card data was in fact higher by the NSO number. The last month, for example, the number was higher by as close as 50 basis points. But as I just mentioned to you, this month, the number which we have seen as per the SBI credit card data, the inflation number is actually around 28 basis points lower than the reported CSO number. So why it is happening now? Because people are now spending their expenses only on fuel. Earlier, what it was happening, they were trying to balance fuel and expenses on grocery. But now they are spending mostly on fuel, cutting down expenses on grocery. So therefore, the price decline in some of the items is of larger magnitude, therefore pulling down the overall inflation. So this is the explanation. Now, regarding the second point on the core inflation and the points which you have asked, I think the inflation numbers in June are a welcome departure from the May inflation number in the sense that the numbers actually have declined in most of the items which had seen an increase in May. But we need to watch out this space in the future because as of now, I understand that the inflation numbers looks a little bit sticky and it will be difficult to get back to precisely below 6% for a considerable period of time in the current fiscal.
The other question also is about what kind of an impact has taken place on household savings after the month of May, the second wave, a lot of people having had to dip into household savings. So what is the data showing you and what are the implications of this rise in household debt and drop in household savings?
No, I think that's again, I think this is an important point in terms of the household financial stress. For example, if you look into the CSO number last year, in FY21, the private final consumption expenditure actually declined by 7.4 lakh crores. So that data is in public domain. And the total household debt in FY21 has increased by 7.5 lakh crores. So that means that even the increase in the household debt has been unable to negate the decline in the household consumption given the pandemic conditions last year and which has been continuing this year also. So in my sense, the overall impact on the household is actually around 14.9 lakh crore if you take that negative number of the consumption decline and the increase in household debt. So given this much amount of stress on the household sector, I think that the recovery and also the fact that currently the real interest rate a little bit negative, inflation is actually running at higher than 6%. I think the recovery will take a little longer. And the RBI data also shows that the financial savings, which was as high as 21% at the beginning of the pandemic, has now declined to 8% as on December 20, which may have declined even further given the second wave and the significant drawdown in the bank deposits, which incidentally around 35% of the overall household financial savings. So if I take all these factors into account, the limited purchasing power of the household could actually constrain the full-fledged recovery for Indian economy in the current fiscal.
So let's talk about fuel prices a little bit. You have in the past made a case, and you made a case once again for a cut in fuel prices, at least for the taxes on fuel, which will reduce the prices. Looking at the latest inflation data, which has stayed steady, didn't jump up, and in fact reduced slightly at 6.23%. Do you think there's enough of an incentive or impetus to actually reduce the prices of fuel?
No, here I think the overall inflation numbers, the weighted contribution of fuel direct and indirect is around 1.8%. So if you take out the fuel component part, the headline inflation is actually lower than 5%. And the fact that every 10% increase in pump prices actually contributes to 50 basis point impact on the headline CPI number. And if you actually look into the increase in the pump prices, I think every 2 and 3 revisions makes it a 1% increase in petrol prices. So my sense is that at the current rate, my only sense is that if the taxes are not rationalized for whatever reasons, if the government believes that there is a the fiscal position is not that great, if the fuel prices are not rationalized, I think at some point of time, inflation will continue to behave stickily. And if by any possibility the food prices doesn't behave normally, which all of us are assuming that this year, but given the fact that monsoon rainfall has been not distributed normally across India, it is still 8% short of the overall average. I think that could put a large pressure on the headline inflation number. So we hope that food prices remain normally behave. Otherwise, there could be some issues with the headline readings at a future date.
So that question always remains: when will fuel prices be brought down via cutting of the taxes which are charged on fuel prices by central and state governments? Thank you so much, Dr. Ghosh, for joining us and explaining to us how the impact really falls on household incomes as well. We'll take a very short break here, but Reboot India coming up next. Stay tuned.